Good morning, everyone. Moro. It is Wednesday, March 27th. It's the last day that we have here, or that's a lie. The second last day of the week, considering that. Uh, Hello. Not sure if this is running, honestly, because I'm seeing like if you if you guys can hear me, let me know because I don't know this this stream is kind of bugging out. Just type in the chat if you can hear. Morning, guys. Oh, okay. Weird. Sorry. On my end, the stream is just like rotating here and saying starting. Anyway, sorry. I just paused there because I couldn't figure this out. So, the good morning, right? Let's restart this. I hope you're all doing well. It's Wednesday, March 27th, and we've got one more day until the end of this week, considering it's a short week. I've said that a billion times. And we got a lot of news, right? Yesterday, some tragedy sparked as everyone's becoming a bridge and engineering expert on Twitter and those spaces, considering what had happened, trying to make sense of all of this, what happened on in Baltimore very early on Tuesday. So what happened was the 1.6 mile long Francis Scott Key Bridge collapsed in the middle of the night. The 95,000 ton container ship Dali, chartered by Maersk, collided with one of the support columns following a last minute distress call, sending 8 workers atop the bridge into the water. 2 were rescued and 6 are presumed to be dead, unfortunately. And responding to the catastrophe, President Biden has called for the federal government to pick up the tab for the reconstruction of the Key Bridge, though that could take years and will require congressional approval. So, what necessarily happened? That's kind of the main question here. An investigation is still ongoing, but videos show that the cargo ship's lights turning off and then on shortly before it struck the bridge. Power to the dolly was said to have gone out shortly after it left port in Baltimore, including the ship's engines, possibly due to a failure of machinery aboard the vessel, which we saw black smoke potentially. While emergency generators eventually kicked in and the lights got turned back on, the renewed power likely didn't impact the ship's propulsion or steering gear, and an inspection in Chile last June even identified a problem with Dolly's propulsion and auxiliary machinery, but the most recent examination conducted by the U.S. Coast Guard in September didn't find any deficiencies. The supply chain is the most talked about consequence for the economy, with shipping traffic suspended until further notice. And Baltimore is one of the busiest ports on the U.S. East Coast, and the rerouting of cargo will create delays and raise costs at a time when consumer and policymakers alike are sensitive to inflation. It would also add to the recent disruption on the high seas, including increased congestion in the Panama Canal and attacks in the Red Sea that have forced traffic around the tip of Africa. So, coal exporter Consol Energy dropped about 7% yesterday in response to indefinite shuttering of the port of Baltimore. The company's operations are said to be highly connected to the marine terminal at the port, which represents over a quarter of all U.S. seaborne coal exports. And recent data also indicates that about 850,000 cars and light trucks pass through Baltimore each year, more than any U.S. port, prompting Ford and General Motors to comment on the possible impact facing the American auto industry. Now, again, like I said, People take to social media pretending or feigning to understand what the hell's going on. I am not one of those people. I'm just looking at some of this news that came out based on the information that we have. I don't know much about this realistically, but naturally the supply chain disruption makes a lot of sense considering the vast volume that this bridge and this port moves in and out. So keeping that in mind, you might want to be looking at some of those individual stocks, right? Some of those cargo stocks, and see the reaction from that. Um, in terms of other news, we don't have too much, as I'll talk about the markets and what had happened yesterday. BlackRock, right? BlackRock is talking about retirement and retirement crisis, which is um, fairly ironic, I think. The chairman, Larry Fink, is warning that the world is at risk of facing retirement crisis. And what if the government and the private sector treated 60-plus-year-olds as late career workers with much to offer rather than people who should retire? He asked in his annual letter to investors. Excuse me. Fink also called the policymakers and investment firms to make retirement investing more automatic for workers, noting that building savings has never been more urgent. When people are regularly living past 90, what should the average retirement age be? This kind of reminds me of what happened in France last year. Honestly, I didn't keep up with it, so maybe some of the French friends can weigh in on this. But I remember I was in France last year around this time, actually, more so April and May, and they were trying to increase the retirement age. So it could be something on the docket, right? Obviously, BlackRock would want something like that. Longer workers makes sense for BlackRock, which owns freaking everything, it seems. So in terms of what we have in news today, we have EIA petroleum inventories. We got survey of business uncertainties, results of a $28 billion 2-year FRN auction, and then we have a 7-year note auction, $43 billion. We have Fed's Waller speaking, and on Friday, the biggest news of the week. Markets are going to be closed for that actually, or I should say the futures are going to be closed early for that. PCE comes out, the Fed's preferred inflation gauge, as well as Jerome Powell coming on the mic on Friday to wrap things up for the week. So we'll probably see the moves and the impact of that on the Sunday reopen, maybe, if it's anything drastic. But with the PCE, you're going to get moves in futures probably pre-market on lower volume, which right, might be pushed to the Sunday and Monday market action realistically. When it comes to the overall market, what we have in these equities on the S&P, on NASDAQ, yesterday was a plight of very consistent selling throughout the day, right? The morning session, which looked abysmal, honestly. Like we were selling the low 90 in the room, trying to hold out for larger moves to the downside because we just saw these semi-active sellers continuously hitting the tape and trying to push lower. And it wasn't until the end of the damn day that we saw this very large slip that dropped pretty much a 30-point move from the highs of day into the lows of day, with an expansion outside of this minor distribution that's been setting up. We traded into that mid 60 on the S&P 500. The reaction from that, right, seemed like a very delayed sell into the end of the day that was most likely going to get picked up. Buyers have been waiting just for lower prices, and the moment we get back above that low 70, especially if we reopened above it, which I was mentioning yesterday to our group, look out for the upside for these guys to clean up all the selling that transpired and come back pretty much into the highs, and that's exactly how that panned out. NASDAQ's a touch bit weaker than the S&P. This morning it hasn't rallied as aggressively, but it's trying to do that, right? S&P is almost at highs of yesterday, and this kind of fake offer into the end of the session that just allowed prices to rebid back above that mid 70, right? If you see something like that, especially on the reopen of a Globex session with just sellers hammering aggressively into the close like that, you're most likely going to get the flip and reverse back to where it came from. And then now, right, we're coming into Wednesday. Tomorrow's technically Friday, right, because markets close after. You're most likely leaning a little more to the bull side as we wrap up the month, quarter, and week, going into a holiday season. But we're still in this very tight range, and it's going to take something more special for the buy side to come in my opinion. I want to lean a bit more long, but we have to start moving above this low 90 on the S&P 500. And the reality of that situation is we see some movement on the overnight sessions, and then the U.S. session is just like nothing, just sideways garbage. So just keep that in mind. We're back within the distribution. Theoretically, based on auction theory, we should just stay in this distribution. I want to lean long, but if we're trading mid to low 90, I'd rather wait for the expansion move through it than try to force a breakout. That's it. That's all I got. We're back in the range. Trade smaller. Trade more passively into the end of this week, as you saw yesterday was whatever. And then with Nasdaq, we have very clean similarities in that 850 area on Nasdaq, 18850. You need a massive explosion to the upside for that leg higher, right? So we'll see how that works. Don't wake up the French people on this retirement matter. I honestly, I was slightly keeping up with it, Laurent, when I was there, but like completely do not know what happened. So maybe I take a look at it. Um, is there end of quarter profit taking place? Realistically, it's more so end of quarter rebalancing. And in some of the names like big tech names, I wouldn't be surprised to see them pull a little lower actually. So before they get picked back up, I think that semis and some tech names are at risk of pulling lower from this into the end of the quarter. But I think generally the market wants to close on a higher note, whether that's going to be in tech or whether that's going to be in another asset that's getting funneled money into it. That's a different question. But semis and I think some techs might have seen a temporary top in this market from that end of quarter rebalance. So that's all I've got. I'm going to trade smaller again today, trade lighter, and mind the potential of a range shaping up yet again. So I want to thank you all, right? Sorry, a few technical difficulties today. There's a pretty big gap shaping out from the open to close on this market, and honestly, if we're opening towards the top band of the rate of the distribution, where a lot of people got trapped on the long and sellers came out, I wouldn't be surprised to see them try to pull a little lower before anything else happens, aka just maintain the range. So check out TradeProAcademy.com. We're going live in our trading room in just a bit, so thank you guys, and I'll see you in there. Let's do this again tomorrow. Wrap up the week.